Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro-dollar. A bullish engulfing pattern yesterday, which wasn't that hard to do as the previous session was an indecisive doji cross, though the size of the move higher was quite emphatic. Also important was how this was the first close over the 50% Fibonacci line of the January 2021 to September 2022 move at 109.44. This had previously capped the market on a closing basis since late last week, and it was the first close over it since early May. Overall, we are still within the March to date bull channel, currently 106.67 to 111.40, highlighted in bright red on my daily chart. Below we have the flatlining short medium moving average, currently 108.83, and the flatlining medium moving average, currently 108.07. Whilst above, we are now within congestion from late April to early May, from the 50% Fibonacci line up to the interesting and influential neckline of the July 2017 to November 2018 move, currently at 110.89, and that's highlighted in dark blue on my daily chart. This neckline capped the late April and May highs and allowed the construction of the mid-March to date bull channel actually in the very first place as well. Now, so far today, a small move higher, but not much, as the market stays close to the previous session's close. Cable, aka sterling against the US dollar. An indecisive doji cross yesterday with an interesting tail on it, down to the next support at 126.99. We are still within the early April to date bull channel, currently 124.80 to 128.62, highlighted in bright red on my daily chart. As previously mentioned, the market's tail dipped down to the interesting 50% Fibonacci line of the June 2016 to September 22 move at 126.99, plus just underneath we have the September 2020 low at 126.72. These resistances, which have now turned into supports, had capped the market back in early to mid-May, so they appear significant. Meanwhile, above we have the combination of November 2020 low at 128.52, plus the upper bull channel line, and a powerful looking July 2021 to date optimized downtrend, which you can see angling down in dark blue on my daily chart. Currently that's at 129.03. These three resistances reach their narrowest and most powerful points in the middle to the end of next week. So, if there is to be an attempt higher, then it would seem better to do so very, very soon or after next week because of the combination of forces overhead being so concentrated. Now, so far today, a small dip lower, below the lesser Fibonacci line at 127.72, but nowhere near the 50% Fibonacci line at 126.99 as yet. Euro sterling. A very interesting, quite large, almost unusual key reversal up yesterday with the widest daily range I've seen since mid-March. It has been enough that we have the possibility of a weekly key reversal on the cards. Thus, if we close tomorrow night, that's Friday night, either over 85.45 or under 85.30, then we'd be on. Right now, we are looking at a possible weekly key reversal up. The action is also significant in that after 2 and a bit weeks of approaching and testing the significant November last year low at 85.45, the market has seemingly finally given up on the move lower. Now, looking above, we have the April 2020 low at 86.69 and the April 2021 high at 87.19. And in between, an area of congestion that we saw being built up as a rectangle pattern and halfway hesitation back in May. Now, so far today, a continuation higher, though at a more subdued pace right now, and looking possibly like a indecisive doji cross, or maybe even possibly a gravestone doji. US dollar against Indian rupee. An immediate countering bearish harami yesterday. Now, some of you might say that it looks like a possible inverted hammer pattern, and I would agree with you, it looks like that, except that an inverted hammer pattern requires a bearish prior candle, something we do not have here, hence my calling it just a bearish harami. This also goes for a shooting star pattern, when the previous session is actually larger than the actual session that you're looking at. It's also too big of a main body for the session to be a gravestone doji as well. What was interesting about the tongue of the day's action was how it stretched up only to the first resistance, and that's the rising long moving average, currently 82.10, not making it as far as the previous session's high at the flatlining short medium moving average, currently at 82.17. This could still all be seen as further encouragement for the bears out there. Looking below, we have an early May piece of closing based congestion between approximately 81.65 to 81.80. Overall, this continues to be part of a pullback from testing the overhead broken upper time, currently at 82.5, of the October 2022 to January 23 mildly bearish shift picture, which is highlighted in dark green on my daily chart. Now, separate to all this, the main recent feature remains the recent bow tie formation of the short moving average, currently 82.33, the short medium moving average, and the medium moving averages. This triple crossover pattern sets up the opportunity for a move higher as the moving averages went in and out of the bow tie in the right order and were mainly pointing higher. The theory indicates that between the 20 to 25 sessions after the crossover, we may see a move in the direction of the bow tie as a result. Thus, we are right in it today, as it is between the 20th to the 27th of June, so look out for any potential moves. We also have, though I'm perplexed by its lack of influence here, the ascending triangle formed between January to March, highlighted in dark blue on my daily chart. The market continues to have difficulties in interpreting this pattern. Now, so far today, a small dip lower, but still within this week's range, and looking like an indecisive doji cross right now. US dollar against the Brazilian real. An interesting pattern combination yesterday, a counter to the counter key reversal down. There was also a bearish closing black Mariboso and a bearish engulfing pattern, if only just on the latter. It was also the lowest close since June 2022. And the first close below the 50% Fibonacci line of the October 2018 to May 2020 move at 477.54. And first full session below the breached lower bear channel line, currently at 481.77, which is highlighted in bright red, and that's of the November 2022 to date bear channel. This breached trend line had acted as a cap on the market in one way or another for just over a week now. Much more of this behavior, and I'll feel obliged to unhighlight the bear channel pattern itself. Below, we now have support at the lesser Fibonacci line at 472.92 and the May 2022 low at 468.98. Before we see the lower time, currently 463.01, of the highlighted in dark blue, broken late July to late September 2022 bearish shift pitchfork. This pitchfork is important as it showed the bearish angle of attack way before the bear channel was created. I'll continue watching the action around the bear channel with interest. Now, sitting over all of this is still the shadow of the monthly key reversal down we saw in January. US dollar against the Mexican peso. A bearish rally there, if only just yesterday. What it did show was how the market seemed uncomfortable moving back into the original breached September 2022 to date lower bear channel line, currently at 17.14.18. For the moment, I'm still regarding this lower bear channel line as being breached, not broken, not just yet. What I suspect may have caused a seemingly temporary move back up is the mess of supports made up from the core band of support between approximately 17.0390 to 17.0135, which has as its constituents the April 2016 low at 17.0389. Additionally, just below we have the middle time, currently at 16.9799, of December 22 to March 23 bearish Andrews pitchfork, which is highlighted in bright red on my daily chart. This middle time had supplemented a sharper bearish angle of attack, the now overhead breached bear channel. Now, I've also drawn a dark green new March to date descending wedge pattern, currently at 16.9491 to 17.4547. The lower trend line for this is just below the middle time. What all this does is show how this market is getting squeezed tighter and tighter between supports and resistances, and I have a strong suspicion something is going to give way in the not too distant future. Now, so far today, a dip down to the congestion between 1703.90 to 1701.35 and capped by the declining breached upper bear trend line.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.